Well, on a day when Goldman Sachs is saying the market is overvalued, some companies were looking for value, finding it, and making deals. After the market closed, Google agreed to pay $3.2 billion in cash for a company called Nest Labs. It makes high-tech versions of devices like thermostats and smoke detectors. It's Google's second biggest takeover ever. Also after the bell, Charter Communications sent a letter to Time Warner Cable offering $132.50 a share, cash and stock. That adds up to $61.3 billion for that cable operator. Staggering takeover bid that would combine two of the nation's biggest cable TV service providers. But the biggest deal, an acquisition in the spirits business, with Japan's Suntory buying Beam, one of America's best-known liquor makers. The price tag, $14 billion, all cash, and that sent shares of Beam bubbling higher, closing nearly 25% to the upside. Sarah Eisen now with more on the buyout of Beam and what the deal means to the spirits industry.
The company behind Yamazaki whiskey and Midori liqueur, Suntory, is adding Maker's Mark and Cavassier cognac to its portfolio.
This was the only property that you could buy, so you kind of had to pay up for it, and that's why you see this purchase price.
One big winner appears to be Pershing Square, the hedge fund run by Bill Ackman, which is the biggest stakeholder of Beam shares as of September. He's up more than $370 million on the position since Friday. Betting on booze in general has been a good strategy thanks to growth in spirits consumption, longer-term growth in emerging markets, and shorter-term here in the United States. In fact, that growth rate of spirits growing faster than wine drinking, beer drinking is actually shrinking.
Millennials, the kind of the younger 20 to 30 crowd, are increasingly going to spirits. And when I say that, it started maybe a decade ago with vodka, and really in the past 2-3 years, it's brown spirits.
While beer is still king when it comes to profits and size, more people are opting for harder liquor, and that's helped the industry overall. Bernstein Research says sales grew 5 to 6% last year, almost back to pre-recession levels. Beam's stock has nearly doubled since 2011 when it spun off from Fortune Brands. Analysts saw Beam as one of the last men standing when it comes to publicly traded spirits companies available for purchase. Now that Suntory has made its move, who's left? Some are pointing to Brown-Forman, the parent company of Jack Daniel's and other well-known whiskey brands, and Constellation Brands, which mainly sells wine and beer, but does have a small spirits business. Think Svedka Vodka. Because when it comes to where the growth is, spirits are the sweet spot. For Nightly Business Report, I'm Sarah Eisen.